All right, sorry for the delay. Good morning, guys. Ken of Tortoise Capital. This is Foundation's check-in for January 7th, 2024. Let's do a quick check-in with the team here. How are you doing? And any specific questions you want me to address? I didn't get any questions by email, so uh, open forum today. Greg, how we doing?
Things are good. Happy to be here. As far as I'll let the other guys, of course, if they have questions, let them take the lead. But if they don't, circle back to me and we can touch on a review of entries. Uh, might be very interested in going over that if possible.
Okay. Ilker?
Hi, I'm fine, thank you. This week mornings was busy, and then I'm working on the foundations courses still. Made a few trades. Uh, no specific questions at this time,
Okay.
but I dropped you a note about the YouTube recordings.
Yeah.
I don't know if you had a chance to look at it. That's all.
Yeah, it's
Thank you.
just I can't do anything about that. There was a disruption in the recording. The There's no extra larger file to process for
Okay,
some
that's
reason.
fine.
So I just deleted the Friday night entry, and I'm gonna re-record the bar by bar session. But yeah, I can't. It's long gone.
That's fine.
Yeah. Alex, anything?
Good morning. No, nothing specific. Looking forward to the session.
Okay. Well, Greg, what are your specific questions on entries,
Sure.
or
And
your non-specific questions on entries?
at the risk of you probably answered this question a million times,
That's why we
um,
do it.
If you could you pull up any chart that any trade that you executed um, as an example, just for a visual, and I can walk it forward. Any chart.
Yeah, all right, just a second.
In a
You
nutshell.
want like a sniper trade of the day?
Sure.
Well, let's see. I have approximately 6,000 of those.
Anyone would do it. It doesn't
Yeah, I
matter.
just gotta pull up the.
I guess in essence, the question revolves around the 2R battle drill because it's based upon entry, and we should have this stuff mapped out even before
Right.
hitting enter for the trade.
Yeah.
Um, and the question really revolves around um, when we go in, how do we know for sure that we will get out in those early stages in the first couple of bars
Mm-hmm.
of the trade? Now, I know in my back pocket, the first thing that comes to my mind is, okay, what's your average win? And then we there have been a couple of iterations of that. So for example, like point 0.6 or 0
Sure.
0.7 R,
Yeah.
and then if it hits that, then you move it to, let's say, break even, or you lock in your no lose for dinner for two. If there's a slope change of the RL10 and it starts going down, which means price has already gone down because price is leading the RL10, even though it's noise. Would you exit a little early? On That's why I'm like any trade would do, because we can just look at it. There's that flexibility in the trades
Sure.
that you
Yeah.
do. And
Yeah.
for me, I'm
The
trying to do
first thing.
everything.
Yeah, the
Good.
first thing I would say is you got to decide what you can execute automatically is actually more important than trying to optimize. Um, than trying to optimize something. Let me see if I get my little annotation tool. I'm actually using the Zoom automation tool on the Snagit whiteboard canvas. So it's kind of mixing two. For some reason, that feels correct. So let me start with this one. All right, this was from Friday, I think. No, this is 2023-05-19 Cliff. All right, so this is the start of the day. Right here. Right, so maybe zoom in on that thing. And
in that particular one, it's almost that's a perfect.
yeah, well, you said pick up anyone, and I hit a random file.
I
So
love it.
I
Okay.
mean, so there it is. So this is well, and that's part of the thing that I'm going to say is that the shape of the entry is like I guess like a chord for a guitar player. I'm not a guitar player, but it's a song that I really recognize and I know. Like this one was something that closed the previous day with a very directional move, and it had a big gap up at the high of the day, and then started dropping like a stone. Well, that's a recognizable pattern. Uh, that's a gap fade. You know, it gapped up and now it's going hard the other direction. In the first bar, it almost completely closed the gap. And so that turned out to be really close to the MMRB in size. And then what would you say the price is that tells me this thing is unleashed? What's the point of absolute confidence that this thing is no doubt failing and going to be excellent?
Right. For me, looking at that, I would say that that's one of your more. I'm going to put it in a bucket of more advanced trades because it's not the basic SSC. I would wait for the PSAR for the
Okay,
RL10 to
all
break the
right.
PSAR.
Okay, so then you want an SSC entry, all right? Well, okay. Well, but here's my point. This is a hybrid frog, which is a standard pattern. You know, I guess second generation standard pattern where I have the opening is here, and then wherever it gaps, you know, if the previous and that's kind of an awkward way to draw that. So this is what I mean. That's the opening moment, and here's where the previous bar closed. The fact that there's a big gap in here, the bigger the gap, the more likely the bigger move. So this is already a good thing to be trading for me. Yeah, there it is. Gotta find my annotation tool. Come on now. Yeah, I wanted to draw that in blue because that's the color I normally use just to indicate the opening. So that's not a price candle. That's just the boundary between yesterday's close and today's open. So the bigger the gap, the better the move. Check?
Yeah, I get it. I'm
Yeah,
following.
okay. So this thing gaps open to here, and I want to trade it because it has that's the highest probability of any of the things on my list. So I've got all these symbols prepared. And what would you think my standard sort would be? What am I sorting it by?
Percent change.
Yep. From yesterday's close. So percent, so that all of these are normalized and can be compared, and the ones that have, and then I'm going to look. What's the first symbol that I'm going to look for?
If market is up, whichever has the highest up, or
Yeah.
if it's down, maybe whichever
Well,
is low.
I always want to know where is the market.
Yeah.
So as a quick way to normalize, what is gapping more than the market? What is gapping less than the market? Right. And then if the market, maybe if that's the zero line, and the S&P is a positive gap. Maybe I'm looking at, these are the ones that had all the positive gaps. And these are the ones that had all the negative, whoops, that should be red. These are the ones that had all the negative gaps. So I'm really agnostic on which end to use. I just look for what's the biggest one in either direction. This is one where CLF, we're looking at, it's automatically got a plus because it's a frog champion and one of my top 5 trading targets. It's got a big gap, and right from the opening, it's starting to fail. So this thing is like there's 3 good reasons to trade it. So if I'm trading the opening, my favorite way to do the opening is actually on a negative gap. So here was the close, and it has a gap down, and then it's going to give me 1, 2, 3, because that's like a morning hook. That's automatically going to be a WMB3 because the size of the gap creates the oversold conditions on Williams percent R that I need. So it's already starting the day oversold. And then by the time it gets about 3 bars, actually, as soon as the second bar closes, I can detect if this is if that's going to be a low, a higher low. So now I got bar 1, I got bar 2. So now I know bar 3 is going to be good. And I can now place this entry here. So this is the most orderly of the morning hooks. And I can put a risk box on it. So when I see tentatively bar 1, and then as this thing is, it's tentatively bar 2, because while it hasn't closed yet, it has the higher low. I know that I can start stalking an entry that as soon as this thing closes, my mechanical entry is going to be a penny above that. So I can put the entry in. Like if I'm doing visual trading on a chart, I can put a green line on my chart just above the highest high of bar 2, and then when that hits, I can be in, and then I can figure out how soon I can get my stop out into the no lose. So that is a really standard play. The hybrid frog happens on the first bar, though. hybrid frog is usually associated with there was a big gap and it's starting to move. And so that has an MMRB plus and minus. So if that thing falls through the gap or falls through that box, excuse me, I can be short or I can be long. It just, I don't know which one is going to work. Whichever one it is, I just get in. Doesn't matter. Now this one is even better because special case, I guess. This thing had an MMRB gap, and for me, if this thing hits the PSAR flip, that's a standard. That would be a standard exit on this pattern, and it's a standard exit because it says that this continuation is no longer happening. So I automatically know when that thing comes up and it starts falling. As soon as that starts falling, I know that I gotta be short. Not later than this move. Not later than this move here. So as this is falling, I'm already drawing that line on the visual chart. So that if it hits there, I'm going to be short. So now, as this thing starts falling, I say, now, do I want to front run it here? Yeah, I do. Because I'm going to have my stop and reverse right there. And there's an MMRB. I've got enough reason to believe that it could do this because it's doing that. And I have these two levels already kind of marked off that this is the soonest I can get in, this line here, because it's fallen a full MMRB. And if I don't get in there, then I can get in here because it will have gotten through all of this crap. It would have penetrated the dragon and a PSAR, and the PSAR would have flipped. So I could get short there. But if I'm already short here, then my decision is, do I add a second position there? Or more conservatively, if price hits here, then my stop had better be to no lose plus dinner for two, and lock in that little piece. Check and hold. Check or hold.
Check. So
Yeah.
if we roll back to that for the calculation for the no lose for dinner for two.
Yeah.
In an ideal world, I'm trying to map out the no lose for dinner for two.
Let's make this even simpler with your exit strategy. Because there's only we want to make this as mechanical as possible so you can just execute a rule set that you intend to execute. Whoops. Clear all drawings. So there was reason to believe we had a harsh winter. Check.
Check.
And the RL10 came to a point. And that's where the PSAR flip is going to be. I know that that's where it's going to turn. And I know the size of my MMRB. And I can see the previous PSAR coming down. As soon as I see that, so I'm at the turn +1, right? Because this can't flip until the next bar closes, right? So this one This one is here. Now, the next bar, opens and goes to here and closes there. Now, I'm going to say, for the sake of argument, that that was enough to make the RL10 tick up. All right? Because I have to have some positive price action. And, truth, if I'm being honest, probably one bar is not enough to do that. So, I mean, this probably had to be, in reality, it probably had to be something like that. But the point is that there is a bar which makes the RL10 change directions of slope from negative to positive. Now, because that is a series of line segments. So here it is starting to slow down. So if I took that last segment and said, oh, if that thing was falling at the same rate, if those previous 10 bars, which produced this slope, is continuing to fail at the same rate, that line should look like that, but it didn't. It looked like this. So it's slowing down, so I can be stalking because that angle changed. And now that thing is falling at that rate. Check?
Check.
But it didn't. Price got better, and price got better. Okay, now it is still decaying at the same rate. Awesome. Now I get some bar that closed, which was enough to change it from a negative slope to a positive slope. Okay? So what that tells you is that there's about a 3-bar price action which is required to take something from, no kidding, a harsh winter to a sharp turning point in the RL10. So when I see all that happening, I can be stalking. Now, my default entry is going to be here. Which is the last PSAR dot from the previously closed bar, because that's the last one that printed while this bar was active. While that bar was active, and we're waiting to see where it's going to close. I don't know where that is. It going to be here? Is it going to be here? Where is that bar going to close? I don't know. It's open. But when it closes, now and only now will that PSAR dot print. Check?
Check.
All right.
And
So because I don't know where that bar is going to be, the last reference point I have is this one. So my default entry is going to be right here because I know where the belly of this thing is going to be, or where it is. That's where it was the last time. That's where the RL10 was printed. So that's where this thing is going to be, and I know how big that's going to be. So now I can say, hey, I don't mind entering here because it moved more than an MMRB off the bottom, so I'll be fine. That's a big enough move to get my attention. So I'll get long. Now, why do I have to have that in play? Because sometimes when this thing was a really harsh winter and then it monkeys around, it can be a 1, 2, 3 move, an explosive move off of the bottom after a harsh winter. So I'm going to trust the PSAR, and the last PSAR dot that I had for an entry was right here at the -1 PSAR dot. So that covers me in case this thing just explodes. Okay, but it didn't explode. Okay, so now it's going to be an orderly, and what I want is just an orderly move like this forever. A nice, perfectly objective, rational move, and then that thing is just going to reliably hit the PSAR somewhere, and there's going to be my entry, and I'm going to have my little MMRB, and there's going to be my stop. But it almost never does that. A lot of times, this thing just starts running away, and then starts to stall, and then starts falling backwards. And if I wait for the RL10 to cross the dragon and then cross the PSAR, that thing will have gone this far. And now I end up buying mathematically in here as this thing is falling, and that drives me batshit crazy. Because what I want to do is I'm wondering, is this going to come down and hit the PSAR where it's going to flip and it's going to become a collapsing dragon? Well, if this thing is falling, I don't want to buy it yet. What I want to see is some evidence of a universal entry going the other way. What's that mean? The lowest low on this leg is still higher than the PSAR flip, and it closed, and then this one opened, and then gave me a 1-2 or a 1-2-3 entry. That's what I would prefer, because now I'm actually getting a lazy man's Kata 2. I actually have some evidence that the first move up is a turning point, because I now have this. That's preferable. But if I wait to see that, then I miss the best move of all, which was the rocket ship move going up that never reversed. So if I decide I'm going to wait for a Kata 2 entry, then I miss. I'm waiting for this to happen, and this thing just keeps going. And in retrospect, I feel like an idiot, because I missed the best move of all, and it moved a whole frog box off the bottom. So, in order not to feel that regret and to get connected to the strongest move, I just decide that what I'm going to do is accept the risk of buying an explosive move off the bottom that hit the last PSAR, and I'm going to slap my MMRB on it, or my collapsing dragon. I'm just going to slap that on there with the standard position size, and off it goes. And because this thing is on a rocket ship move, I should be able to, within probably 1 bar, just get my stop above my entry, and now my risk is out, and I got this clumsy feeling entry. Not clumsy, but I got this, god damn it, I got this entry into it because it was rocketing up like a rocket ship. So that's why I just, on the way down, as this thing starts stalling, I'm always putting these tentative, I keep lowering this entry as this thing keeps going down the stack, so that if it decides to suddenly come in and just smash and go, then I'm in. Now, what would cause it to do that? If I'm trading something narrow like CLF, That's such a small part of the market. There could be one guy that's going to put $1 million buy to buy Cliff if it comes down to a certain level, and he's just going to buy it. Because he knows that if he buys $1 million worth of Cliff, that might be enough to turn it, and he doesn't care. He just is on a contract with his guy to start buying Cliff at an average price of something. So, or whatever reason. Hey, what if it was SPY? It could be the plunge protection team saying, you know what, guys, we got to trigger a run in the other direction. So we're gonna, if it hits that price level, we got to protect against a panic sell. So we're just going to start hitting the buy, and we're going to cause all the little momentum players to move over to the buy side and trade algorithmically or whatever. They have some algorithmic trading. You're more likely to see that in as the reason in the index rather than in some narrow mid-cap steel steel company. I don't care why it did that. It's just that it's not unusual that after a harsh winter, which itself is an abnormally steep panic selling, so it's already prone to be wrong. So if it hits some turning point down here and just starts taking off, I'm betting that if it goes through the PSAR, I can get an entry and get my risk out in the next bar or two before anybody can get at my core capital. A second mouse, quick bite, and protect my ass. Battle drill number 1. All right?
After entry, when we have the entry box now that the prices cross the PSAR, we
Yep.
have our stop. That's
Yep.
the noise box.
Yep.
And we're not going to mess with it while it's in the noise box. The decision where you say that you're locking in the gains ever so slightly, where that basically where you're putting your
0.2.
note.
Whatever $100 for 0.25, because I'm trading with $400 of risk, and I want to preserve $100 because that's dinner for 2 in Kansas. I bought dinner for 5 in Kansas yesterday for $200 at our local sushi shop. What's that
And if
mean?
we're
Yeah.
and if we're getting
So a
if
dinner
we-
for 5 in Kansas and eating sushi and a couple drinks was $200. So that's $40 a person. If it's dinner for 2 plus a $20 tip, that's $100. And if I'm trading 400, that's a 0.25 R for me. And if my MMRB happens to be here, and my entry, my little emergency entry is here. It should be green, sorry. My emergency entry is here. And the phenomenon is, so I'm in this bar right here, and then this thing just goes. I'm watching this move, and I'm ready to take this line and just yank it up and drop it in. Just tap it in. Done. It could be in the first bar if it moved on my bar of entry like that. Now you tell me. I don't care. It's one of these 3.
Can you're not using the trailing stop. You waiting.
You could, if I was using a trailing stop. If I was using a trailing stop, and this is 1.0 execution risk, when that thing gets to 1.0, I think my stop should be right here, so I'm just going to jump it up to there. So I have to go to 1.2. What's my average win? 0.6. If I get a 0.6 win and I'm doing a trailing stop, then my stop is down here at 0.4, or it's minus 0.4. That drives me crazy. I hate that.
So if we're doing the 2R battle drill and we get stopped out at the no lose for dinner for two at 0.2,
Yeah.
we've already established where the re-entry point is. Is there
Yeah,
a
because if that thing went to 2R, it's already 3 times larger than my average win, and I'm betting that this thing is going to do that.
where is your re-entry for this in this example? Out of two.
Because the dragon is the next evidence that it. Okay, the first thing was, now remember what that represents. There was a harsh winter, and there was an explosive move to 2R. That's 2 extraordinary plays. Now, for the Kata 2 to work, I had to have this turning point in the RL10, and then this is the RL10, right? That had to have another turning point right there, and it had to cross the dragon. That's enough that this crossed a threshold, and now typically the entry here, this is less than an MMRB right there. That little move right there is less than an MMRB. The MMRB is usually like that. So I'm already on the re-entry. This is going to be my exit point because that is hardwired. This is already going to be less than a 1.0 loss because all I need to see is it making a collapsing dragon move. So I can enter just as soon as that crosses the dragon, which is less than the peak of the RL10. Because the pattern you'll see invariably looks like this. There will be a bottom in the RL10. There will be a peak in the RL10. There will be a higher low in the RL10. And the dragon will be here. Inside the pocket. And this is the emerging dragon. And anything north of that is obviously good. It's obviously good because the RL10 just made a new high compared to the previous peak of the RL10, which defined the channel. So, my signal to enter inside the pocket is crossing the dragon. Because the RL10 made a higher low, and that was a successful trade, which got me out somewhere in here. Somewhere on that line segment, it got me out. Whatever my exit was.
And on the re-entry for what I have been doing, maybe not the right thing, is that the stop then increases to the original first trade's MMRB, if you will.
Well, here's where, if I'm getting, if that's my entry, my stop must be at the most recent turning point in the RL10, because the justification for getting in was that the RL10 came to this point and then at that point reversed and crossed a dragon. So you have, that is evidence of a turning point in the market, that the trend is now up until proven otherwise. And it's supported by the notion that there was already a successful move after this last turning point.
Right, and then immediately I've locked in the no
yeah,
lose for dinner
yeah.
for two.
Yeah,
But,
the
and then,
boundary of this was the previous turning point where the RL10 reversed, and now it went to here. Okay? So here is the RL10, and it made a definitive turning point. And now it's making this move. Now what I have, here's my trading hypothesis, that this, if this was an exaggerated harsh winter, that it oversold, it went past the correct price, whatever that is, and cleared the deck. Those guys are all content. They made money on the short side. And now the buyers are taking over, and look what they did. There was enough buying pressure to make the RL10 turn, one, and to push it up to this height, two. Now they ran out of gas. So that's how much buying pressure there was. It was enough to make it stop and then go the other way to that height. That's how much buying pressure there is. Now the selling pressure comes in. There was enough selling pressure to make it fall all the way to here. And now the buying pressure came in. And there was enough buying pressure to make it stop and to make it reverse. If there was only as much buying pressure now as there was before, I have reason to believe that it could go that far on this leg, which means it should go higher than the previous emerging dragon. Check or hold. If this is symmetrical, this thing should go higher than the previous high. Check or hold.
check. So
if it does, that means the first sign that it does is I have a confirmation of an emerging dragon occurred, because it took out the previous high of the peak of the RL10. Now, because that's the hypothesis for this was actually a turning point and this thing is going to go, how high is it going to go? It's going to go back to wherever the start of the last harsh winter began, because we're making the hypothesis that the harsh winter was false, that it's going to return to the previous harsh winter, which could have been a sideways quiet channel, and now suddenly, out of nowhere, this thing collapsed and did all this nonsense. So I think if this works, it's going to go back to wherever that was. The way it does that in these little stages is from these turning points in the RL10, like little tinker toys. Now, my entry in this pocket was based on the dragon. The dragon parallels the RL10, but is a little bit smoother. It is also based on a 10-period moving average of price. And because it is smoother, like a snake, it turns a couple beats after the RL10 has reversed. So when the RL10 crosses the dragon, the fast moving average, which is the RL10, crossed the slow moving average, which is the dragon SMA10. So I'm willing to take that speculation. I'm getting the entry in the pocket. What's the next piece of evidence that tells me the hypothesis is still continuing?
The emerging dragon.
Yeah. When the emerging dragon happens, I now have evidence that this is no longer the lid. It's going. And what do I have? I have that much of a gain. How much of a gain is that? It's that much. Where was my stop? My stop was at the belly of the RL10 right here. Because if this failed from here and went that way, then the next stop is down here, which is the collapsing dragon off of this, which means that the harsh winter was not a fake out at all. It's the real deal. And I got to be short in a big way for my preferred target that way. So on my re-entry, my stop must be here. I have to get out here so that I don't get out there, because I'm going to be short not later than here because of that collapsing dragon. That now makes this a pocket on the short side in which I can get. I'm going to exit my Kata 2 long here for sure, and I'm going to be short not later than a collapsing dragon, which now makes this a decision which says, am I going to get short in here? That's the same decision I have to make on the first entry, which was if it started failing right away. Like if it didn't even get up to a 2.0, but starts failing right away, am I going to get short in here? It's the same decision as over there.
On the first action, that when you have your no lose for dinners for 2 and you lock it in at 0.2, you're sitting on your hands for until it hits that emerging dragon, and that's like what the 0.6 R that you're waiting for it to break the emerging dragon until you hit the re-entry.
Just a minute. Let me draw the clean.
By the way, this is great. I love this.
All right, so that was the last PSAR dot that printed, and my open bar is this one, right? So this thing went down, and then there was enough movement that instead of failing, instead of continuing to fail, it started giving me some of this crap, okay? So it made a specific turning point, and then I got in at that PSAR. And maybe my MMRB was this based on the statistics. But if my entry hit the PSAR was larger than my spreadsheet calculated 1/10 of a range stat, my one execution R is this. Because this is the price that tells me that the long side trade did not happen. So that's one execution R. This whole box is noise. Now, what if price starts working? Crap, price is working. Now, my standard template is I gotta have 0.2, 0.5, 0.7, 1.0, 1.2. Why? Because 0.2 is going to be whenever I move that stop to no lose plus dinner for two, that's going to be the amount that I'm locking in. So I got to know where that level. Okay, well, I'm going to use 0.3. Okay, then make it 0.3. Pick one. That's the first one that I got to go to by rule or policy based on psychology, which is based on money management. All right?
Could I ask you a quick question?
Sure.
When the price starts to go up, I struggle with this a little bit. I know that the actual buy point would be RL10 crossing to PSAR.
No,
But if
no,
the
no,
price
no,
bar,
no, 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 no. Price crossing the PSAR.
price bar itself.
Price.
Okay.
Why?
Okay.
Because you have to wait on the explosive moves.
Yeah,
These are the biggest price bars ever
yeah,
because all of the sellers disappeared, and the only guys left are the buyers. And then everybody that has inventory wants you to buy at a higher rate. So as soon as they see all the selling pressure leave, then they start raising the ask very, very fast.
yeah,
And that's the point where the difference between price and the RL10 is the greatest. When this is an orderly little step function and price is going up, then the RL10 is equal exactly to the price. But if you get explosive price movement, temporarily you get a difference between the price and the RL10. Now, it catches up really fast. It catches up really fast because that's what regression lines do. The simple moving average is wider. That's the
Yeah.
one that creates the dragon.
yeah, slower.
So when this is the fast moving average, that is the slow moving average on the tens. The RL30 is the next fastest one, and compared to the RL10, the RL30 is slow. This is fast, and this is slow. The dragon is actually in between them in terms of speed. The SMA is slower than the RL, but this one is faster than the RL30 because this is using 30 data points, and this one's only using 10. So when this thing is explosive, you have to take the price crossing the PSAR because you can't wait for the extra 2 or 3 price bars to form so that the RL10 will catch up. That's what happens when you get 3 bars of explosive buying and then it stalls. Now the RL10 has crossed the PSAR, and that's where you find yourself buying
Yeah,
a falling RL10. But sometimes this thing doesn't stall. Sometimes it just keeps going, and then you end up buying the second leg up, and now you got, instead of buying here, you end up buying here. So to preclude that, as soon as price goes blasting, if price goes blasting through the dragon,
yeah,
price goes blasting through the dragon, and the dragon is going to turn, I just hold my nose and I say, you know what? I'm buying it right here. Excuse me. I'm buying it right here because it hit the PSAR, and I'm going to jump this above my entry as soon as I can so that you can't catch me with some fake. And that
Correct.
means maybe I'm just locking in 0.2. Fine. I protected my core capital. Then if this thing goes all the way to 2.0, shit, that's so easy because that thing is likely going to do this with the RL10s. And when the RL10s change, I've got a COTA 2 that's easy. But what if, let's say 0.7 is my next key price up. The 0.2 is significant because that's where I'm going to jump my stop to. Check.
Check. Yeah.
Well,
Point
hold,
0.5 I just put in there because that's half of the execution risk. Question.
hold. So we're at 0.2 in reality, and
Yep.
price, not RL10, is going up. Now it's at 0.3,
Yep.
0.3, 0.5. Are we
Yep.
locking in at 0.3, 0.5, 0.2?
If
Because
what's the worst thing that happens if you do that?
you get 0.2 and then you
Okay,
have to
done.
do
Is that bad? How does that feel?
I'm dead
Yeah.
inside. There's no feeling. But
I'm not me. Not me. That's why that's where your problem is. You just made $100.
right, but now
You can take your wife to dinner.
we're waiting then at that
My
point in
risk
time.
is out
Right, true.
because I just made 0.2. What did I really make? I really made 1.2. Why? Because I felt the loss of $400. As soon as I put that entry on, actually, before I even put that entry on, I'm already feeling that I lost a full execution R. I already feel that. Even before I entered it, I'm in a state of anxiety, pain, and suffering because I know that I'm going to trade.
Yeah.
And every
That
time
I
I trade, and every time, listen to this. Every time I know that I'm going to trade, I know I'm going to lose $400 because I always do in my memory. I remember how many times I bought this and then I lost it just in time to get a collapsing dragon. And I just said, God damn it, why didn't I just wait for the collapsing dragon like it always does? Because it doesn't always. But in my memory, I remember, shit, I'm going to lose a full execution risk. I'm going to lose $400. And now suddenly I enter it and I'm in full despair. Now I know I'm going to lose 400 because I pulled the trigger. And this thing instead allowed me to lock in 0.2. I feel the relief of a 1.2 trade. Because instead of losing that, instead of breaking even, I made 0.2. That happened in 1 minute or 3 minutes. Let's say it happened in 3 minutes. $100 in 3 minutes is $2,000 an hour. That's my labor rate. If you're dead inside from that, then you need to reframe and change your mind.
I'm just kidding. So this is kind of like are we cutting our winners short by doing this? Because then
Here's how I'll tell you. If I did it 100 times and I look at my average win and I look at my average loss. Where's my pen here? There we go. And you're right. I have answered this 1,000 times. I look at my average win to my average loss. Let's suppose that I have a 50% win rate. And let's say that my average win is 0.3 and my average loss is 0.2. I am letting my winners run compared to my losers. Do you want to trade a 50% win rate that has a 3-2 payoff?
Yes, I would do.
That's what I care about. I don't care about a one-line entry that says let your winners run. That is bullshit. That is bullshit. This is what matters. The coin flip. What is the coin flip and what is the payoff for your statistically significant trades? That's the first time that you can make a decision about your rule set. In order to make that decision about your rule set, you have to have a standard way of treating that entry. Until you get 100 trades that are based off the same decision set, then you're just living over in the world of platitudes. Let your winners run. Shut the fuck up. That has caused more trouble than it's worth. Now, you know why I don't worry about cutting my winners short? Because I know how to re-enter. Here's why. Here's why that matters. At the start of that move, the harsh winter is over. There's going to be some maximum move for that next leg, whatever it is. This thing will have failed so many times that we just give up on it. And then if we look back in retrospect, we're going to say that was the maximum move. How big is that maximum move? Statistically, how do I determine how big that was? What was the peak RL10 ever? You know the other place that you can see that is when the RL30 peaks and rolls over. So nobody knows how much that's going to be. And if I am locking in, it's going to typically be this. And if I'm getting kata twos all the way up and I'm strict, I know how to this is what I require to get back in. If this is a good enough move, I'm going to get a bunch of kata twos all the way up, but I am going to be absolute death on locking in pieces. And if it's 0.2 and 0.2 and 0.2 three times, I get 0.6 out of that series, and I made $240, and I'm getting paid $2,000 an hour to hang around. That's what grinding looks like. And if I get 100 trades like that, and my win rate is 50%, and my average win is 0.3, and my average loss is minus 0.2, then I declare that I'm letting my winners run and my losers are cut because of the relationship between those two numbers. My average win is bigger than my average loss. I declare that I am letting my winners run. That's how I'm turning let your what is my fucking pen here? Let your winners run. What does that even mean? How do I measure that? Here's how I measure it. Average win is better than average loss. You know how your average win is going to get really big? Is once in a while you're going to get a 2R battle drill. Take a look at the sniper trades of the day every day for the last 200 days. How many days out of 200 have I had at least one winner better than 2R?
Almost every day.
100% of the time.
Huh?
100% of the time, I get a trade intraday that's better than 2R. Now, am I taking 20 or 30 trades? Yes, I am. You know what my average win is? 0.6. You know how many 0.2, 0.3, 0.4 wins I have? A lot. You know how many 1.0 losses I have? Not very many, but some. So that's what as long as I don't worry about letting my winners run, I worry about managing my histogram. I worry about getting my risk. It's my risk that I'm worried about, actual dollars. When I get the move to 0.2 to plus 0.2, it's 1.2 in my psychology. My thick skin. That generates a thick skin where I don't give a shit about let your winners run platitude. I hear Van's voice in my ear and I forget it immediately. I do not care. I do not care about let your winners run. I don't care because that is a theoretical statement and a platitude about generic trading over every time frame forever in some fuzzy future. I'm worried about this goddamn trade. I don't want to lose money on that specific trade. And when I can get to 0.2, I've locked in a win of 1.2 because I already felt the loss of a full 1.0. Because as soon as I felt the urge to trade, I know I'm going to trade. Why? Because the urge to trade is the will to take the risk.
Yeah.
That's where the will to pull the trigger comes from, is the desire to trade. So I know I'm going to trade. I know that. The chimpanzee is driving. I'm going to go. So as soon as I go, the chimp's going to go. Shit. I'm going to lose 1.0. I'm going to lose $400 again, like I always do. I'm going to fucking lose it. I haven't even entered yet, and I know I'm going to lose it. I'm $400 in the hole. Jesus. I hope that when that fails and I hit the collapsing dragon, my favorite pattern, that's going to pay for that loss. Meanwhile, now all of a sudden, I'm stalking the entry and I'm making sure at least, I'm not going to take a shortcut. At least I'm going to enter according to the damn rules. So I say, chimpanzee, get in the back seat, lock the door. I can hear you banging around. I get it. I'm going to enter just as soon as every criteria in my pattern fires. It hit the PSAR. I'm long. There's my 1.0 stop, which I've already lost. I've already felt all the emotion of that negative loss. I am burning with desire and burning with intention, professional commitment to get to 0.2. Once I can get to 0.2, I can take my wife to dinner. I'm not going to blow up, and I'm going to look, where's 0.5, 0.7, 1.0, 1.2. At 1.2, if I was just doing the trailing stop, I would be at that level. Check or hold?
Check.
I'm already an above average win. So when I'm at 1.2, my average win is 0.6. When I'm at 1.2, I'm determined not to let a 1.2 go into negative zone, to become below average.
If our average win is 0.6, are we using the same philosophy of
I would use this philosophy and demand that your results comply. If you follow this philosophy, your numbers are going to end up looking like that, by the way. So follow the logic. And when you get to, just know that as a check on your exit strategy, you're going to come up with your own personalized way of getting there. But I'm just telling you that when you are at 1.2 execution risk, you better be locking in 0.6. You better be locking in 0.6. And I'm going to tell you, if you're at 0.6, you better be locking in 0.2 or 0.7. If you say 0.7, then that's half of your risk box in your favor.
Makes sense. Super helpful. Thank you, Tan.
At 2.0, I'm never thinking of a second position until conceptually this thing is made 2R, because then I know that the move off the bottom was so good that I'm going to get, I guarantee I'm going to get a COTA 2. And then I'm going to hit the COTA 2s until they stop. On all of those subsequent moves, how do I trim the ones that harsh winter and they got the surge and now it keeps going up? Oh, hooray. The size of that move, the size of this move, the size of that move, I was trying to draw that so it was diminishing in height. And the RL10 will look like, and then instead of this, it looks like that. And then instead of this, it looks like that. When this thing peaks, the dragon mathematically has to be like that. As soon as the RL10 peaks, I'm hitting the skin of the dragon. Why? Because the belly of the dragon, if I was ever going to go short, is kind of the first place that I go short. Why? Because this looks like a harsh summer. And then it crossed the dragon. And there we are. It's now going to come back to, so I'm already thinking about short or stock COTA 2. This is conservative. This is aggressive. Stock the COTA 2, because as this is falling, see, this has to come through the dragon in order that when it reverses with the RL10, that I can get a higher low. Which means that at some point in the future, this dragon is going to roll over enough so that now it ends up looking like this. And then that's typically going to be by MMRB. It's either going to be here, or the box itself could be down here. But if this happens fast,
Dr. Lang, can you shift it a little bit to the left? The pictures is covered by the Zoom thumbnails.
what about now? How about now?
Didn't change. Same.
Man.
I think it's good. You're talking about the diagram.
Yeah.
Yeah,
It's solid. Can you? It's fine.
Well,
That's
I
the
can't. I can't move the. I have to redraw.
That's all right. That's fine. That's fine. Yeah. Okay.
The point is on a really good move that gets up to 2R, I am jumping the stop up to the way I carve that even closer, take more meat off the bone, is jump it up to the upper skin of the dragon, because the lower skin of the dragon is the first place that I can get short. And then what I'm really doing is I'm stalking. I am stalking the Kata 2, because I don't know where the R10 is going to reverse. But as long as it reverses higher than the original SSC's red line, then I'm always going to have the conditions for a Kata 2.
so when price crosses the skid, not the RL10.
Yeah, at this point, this is where you can get some discretion if you want. The PSAR will have flipped, most likely. If the PSAR flipped, you could take price hitting the PSAR. As long as you're entering short of the peak of the RL10. I like the RL10 crossing the dragon and then just buy it wherever it is. As long as it's in the pocket, I'm happy.
Because so just to reiterate, before when we did the SSC and the PSAR flipped, we were jumping in when price crosses, not the RL10.
The
In my
PSAR,
mind's eye,
right.
I'm saying that the RL10 is representative of price.
It
and
is.
Price is actually
It is.
noise.
Now remember, what's the difference between an SSC entry and a Kata 2 entry later?
SSC should work because we don't know if the SSC will work in the beginning.
Yeah, the Kata 2 required that the SSC speculation paid off. So the SSC is irrational. You are trading against the trend. So what I need for evidence on that one is price going through the dragon it had to go through the dragon and hit the PSAR. So that's where my entry was. It hit the PSAR. Now I have a successful SSC that has pulled back and has started to go again. Now the RL10 reversed. And now it crosses the dragon. And it hasn't even hit the PSAR coming down yet. Typically. So I can get in here because I have the positive SSC gave me enough extra information that now I could enter a little bit sooner. Whereas over here I had to wait for the PSAR. Here I can enter on the crossing of the dragon. And then my exit, my full 1.0 loss is down here, but I'm going to exit.
Yeah, tip of the.
Yeah, I'm going to exit here. So I'm already only like a 0.4. What I did was just gave myself a potential 0.6 because I'm front running the entry. I'm being a little more aggressive because I have the evidence of a successful SSC. Now says I can, but I'm already restricting. I'm restricting my loss to a 0.4. That's one of the ways that you get an improved average loss. And remember, this urge to trade, I still felt the the loss of $400. Every time I feel the urge to trade, I feel a $400 loss coming in my near future. And then every time I don't take a $400 loss, the sense of relief, when I get to no lose plus dinner for two, the sense of relief I get is 1.2. That is not a trivial moment for me. That's a really important psychological tool. Now, all of that, then now, when I do that 100 times, trying to live up to that template right there, I can then see what is my win rate, what is my average win to my average loss. And then that gives me the payoffs and whatnot on the coin flips. And we're talking about, even with just the mechanical back testing that we're doing in the Edge Raider, and just looking at the stats on the sniper trade of the day, it's not unusual to see a 0.6 win rate and a payoff rate of 2 to 1.
2 to 1, yeah.
That's a 3 to 2 payoff. That's a 3 to 2 win rate and a 2 to 1 payoff. You'll take that forever.
Those guys are using those guys are not doing the no lose for dinner for two though. They have a wider allowance.
That's even, and so their numbers are not even as good as mine, I think.
Right.
If you just use their rules, you're getting this.
That's pizza flip, but with no lose for dinner for two, what I struggled the most is re-entry without waiting for the Kara 2, but the price.
Okay, here's how you do it. Here's how you do that. Don't do it.
Okay.
Don't do it. Don't do it.
Because I then end up losing, or I just
right. Don't do it. Don't do it until you get a 2R. Until objectively, until that thing moved to a 2R win. Let's say you did this and you got out and you captured 0.2.
Yeah.
It's dead to you until that thing subsequently goes on and hits what would have been a 2R win. That tells you there's enough energy for subsequent kata 2s. Here's why that matters. Think about this. All you're giving up is the uncertain kata 2s. If this SSC worked to 2.0, all the kata 2s after that are all part of this grand upward move. And you'll get kata 2s galore. The ones where you're losing money is the SSC worked to the point where you captured 0.2, meaning that it only went to 0.6 or 7 or something like that. And then these little kata 2s all diminish. There's nothing there. How do you know there's big energy? Because the first move went to 2.0. That's what attracts all the guys to buy the dip, was that move. So you got 0.2 out of it. Okay, fine. That signal told you got lots of kata 2s in your near future. That 0.2 eliminates all of the worry about maybe the harsh winter is what's true. You know what I'm doing? If I get a 0.2 and this thing is starting to go this way, I'm looking for kata 2s that way in collapsing dragons. Because until I see a 0.2 to the upside, the harsh winter is still the decisive energy.
So if it's possible, you get a 0.2 on the first one, and then you enter on the kata 2 and kata 2 fails, and that tells you that there is no energy going upwards.
There's no energy to the upside. Now you should be looking at, I should be looking at this downward energy. I'd actually like to say, hey, let's say you have an SSC for 0.2 and then a kata 2 that fails. Wait one trade, whatever it is, a kata 2 or a kata 2. Don't take the next trade. Take the one after that. And now it'll probably be kata 2 failure, or crossing the Bollinger Band mean, or crossing below the VWAP.
you're making an artificial channel, and then you're
Yeah.
waiting for that breakout.
Yeah.
Yeah.
You know, when you got the thing that was a harsh winter, and then the SSC gave some little thing, I'll bet you, sight unseen, that stuff is below the VWAP. I'll just bet you. And I'll bet you that the Bollinger Band mean is probably, if I could get a red dot, I'll bet you, come on, red. I'll bet you that the Bollinger Band mean is up here, something like that. And I bet you that if this thing gets up here and then fails and starts coming this way, as soon as that happens, you should be thinking about collapsing dragons and kata 2s to the downside. And if this thing breaks through the Bollinger Band mean, sometimes this thing will be so good that the price action will cross the Bollinger Band mean, and then it'll cross the VWAP, and then you should be into that downward energy. But notice where the VWAP is. A lot of times that first SSC can only get to the VWAP and then fail. That's enough to capture. That's where I get a lot of 0.6s from. And then you'll see the collapsing dragon looks like that. And then down it goes, because that'll be the bottom of the RL10.
The guys doing Forex, do you have a replacement for the VWAP, considering volume isn't a thing?
What's that now?
On Forex, the VWAP is not like a thing because every
Oh.
broker has its own volume.
Don't use volume for Forex. That's
Right,
my
right.
Yeah.
suggestion.
So is it-
That'll
is there
blow
a-
you up.
Is there a
I would
replacement
just
for
use
VWAP?
the SMA 30, middle of the river.
Check. Okay.
Because sometimes you'll see the later in the day for equities, the VWAP moves less and less. So a lot of times this morning move is going to look like the bottom of the RL10 is here. And the return to the VWAP is sort of that's the first leg that I actually feel has some merit. The other one that I see, if this is the morning trade and it was a gap down, I say, hey, where did the VWAP close the day before, or where was the, especially if this came into the station and you had a really tight channel, that's sort of like, that's like this thing sold off down to here. Maybe it gapped to here, and then the move was here. This is my favorite morning hook pattern of all. I mean, that's the one that just it gets my attention every time because it starts the day with despair. Gap, and then it goes to a fail stat. And then it gets a sharp, it gets enough of a move, and there I am. There's a reason why the VWAP and the Dragon are both orange.
Dr. Long, for the morning hook, do you prefer to use the SSC or you check the WMB3? Do you have any statistics on that?
Say that. What was the second one? The
SSC or WMB3?
The sharper this is down, the more I'm WMB3 because
Okay.
that's fast.
Yeah, it's faster.
That's
Definitely.
faster. And the sharper down and the sooner up, the more it feels like it's going my way. Because now the move is this. But if it's this, it takes some time for this to unwind.
And yeah, for me at least last week, Wednesday and Thursday for Tesla, the OR3 and then the ensuing bars were 2 hour.
Yeah.
2 hour in volatility in one single bar, and then I got chopped. I wasn't prepared for that.
Yeah. And Tesla is getting to the point where all the fanboys have been they've been beat up. It's
Yeah.
almost Tesla's not even any fun and spiritual anymore. It's just like Apple and Microsoft and Facebook now. The thrill is gone. It's too big. There's been too many. It's too much. You know, it had this move, then up to 900,
Yeah.
and now it's come all the way down. Now it's just doing this crap. So that run is done. It's just a thing now. It's not even. It's less interesting. You don't. You'll see on the sniper trade of the day. It's rare that it's the trade of the day anymore.
Yeah.
It used to be quite a bit. So in my mind, AI, IP, because these are much narrower. You know, it doesn't take as much to move that.
Correct. Yeah.
Those are the secrets right there.
No, Cliff. That one I struggle with. That one. Cliff and AA, Alcoa, I had nice trades on Friday. But may I ask a question about the Friday trade I had on AA?
Sure.
I checked the daily on Alcoa, and it was 5 days down.
Yeah.
And I checked pre-market, it was down, so it's gonna get down. I said if it gets down below the low of last day's low, then I'm gonna go short. Maybe I didn't do it properly, but I was short, and then it immediately started to go up. I looked at the 3 minutes. If I were trading 3 minutes, I would have gone long, and I couldn't move till I hit till it got to my stop. Then it hit the stop, and I reversed.
Now here's what I want you to. I want you to realize. This is an important one. The idea of the compound critical state.
Yes. Yeah. Different time frames, all critical.
Oh, this.
Yeah.
I mean, this is a 5DD.
Yes, exactly.
It is in a it's in a doji too. Holy Christ.
Yeah, that's what I noticed.
Yeah, so what you have to have is this.
Yeah, that's what I drew, and then it
right.
got
So,
below, and I got short immediately. That was my mistake, I think.
Well, except this is how I trade this now. When it's in a compound critical state, this is a normal entry inside here, okay?
Correct, yes.
This is abnormal.
Yes, abnormal, yeah.
And this is abnormal. Okay? If it's normal, there's two conditions. There's two ways to trade that one. So that's the yellow zone now, right?
Yeah, tactical trading, yeah, within day.
Yeah. So there's two ways to trade that one. I can wait. I can wait for price to leave. And use the width of the day as something like one execution R, okay? Or, like if it gapped down and I could see 2 units of reward to the upside, then I could actually trade that as a morning hook. It comes down and then takes off, and then I can get my 2 little units of reward.
That's, I think, how you actually trade it that one.
Yeah. So I can get my 2 units of reward. Then, if it takes off, I now have a decision. I could either say add a second position or just commit this early win to pay for a swing trade.
Yeah.
I usually will just add a second position and just pile on, and then at the end of the day decide, do I want to keep a swing trade on with a wide stop? So that's the 2 ways to trade the normal.
For the white stuff, what do you mean wider than the 30-minute regular MMRB, I think, right?
Yeah, I might be, let's say that it went up. It went up to here, and then it came and hit the edge of the dragon, and I decided to get out of the turbo trade. And let's say that I had something like, let's see, Alcoa.
If you had 2 positions, you got out of one and left
Yeah,
one.
maybe the intraday trade is 10 cents risk. And so if I got $800 because I got 2 positions on,
Yeah.
I might have 8,000 shares. But maybe this went, I don't know, 50 cents. So now I'm only going to have 400, 800 shares. So I'm going to sell 90% here, and I'm going to keep a wide stop. And maybe 50 cents is not, maybe that's too tight. Maybe I'm going to go down below, I don't know, whatever. Like on this one, my stop might be here, or it might be near the Bollinger Band main, because I'm making a decision here to hold it. Maybe my stop was $3
Oh, yeah.
because it's over the weekend.
Yeah.
So then I'm only going to hold 267 shares instead of 8,000.
Yeah.
So I use the 8,000 shares to pay for the overnight risk. So anyway, so if this thing is in a 5DD and it's in a doji, it's a compound critical state. So I'm going to set up the long and the short for normal conditions. And then if it opens inside the normal, I have to watch where it moved to. I can trade in the yellow zone if I can see 2 to 1.
Correct.
And then I treat the high and low of the previous day as really strong support and resistance. But if it breaks through, then the normal way I can trade that is this. So if I don't trade intra in the yellow zone, I can trade the breakout. So that's standard work for normal conditions.
Yes.
But what this did was it gapped down to here.
Yeah, significantly down.
Yeah, so now abnormal, what I do is I take the open and I put a MMRB on either side of it, and then I trade that.
Okay. You mean for 3 minutes or 30 minutes? Or
3.
either one?
3.
3. Okay. Okay.
Because I love me some abnormal. I love me something that is already in a compound critical state, because this was also MPRC, because the size of the doji was so small. Because this could have been a large bar, which was also fine. If it was a large bar like that, and then it didn't gap, I'm still going to do that.
Okay.
And then my stop would be this. Whichever one. And I like that on 3-minute.
Okay. For this one, I looked at it in
And on
3 minutes.
this one, oh, by the way, you could do that on 1 minute. Because
Oh, yeah,
wherever
1
the
minute,
open
yeah.
was,
Exactly.
it's
Yeah.
I don't care what the time was.
I did that for Apple for
I
1 minute.
just want this. This is the one that you want. Because
Yeah.
now I've got 9 more. I got 9 more boxes in both directions, right?
Yeah.
So I don't care how long it takes to come out of that box. As soon as it comes out of the box, it's going to try to close the gap, and then off it goes. So that's what I do that, and I put that on regardless if it gapped up or it gapped
Okay.
down. This one, if we go, that first random one I pulled up from Cliff from last year was like that. It had a big gap up and started failing. That's why I just automatically got short, because my standard work for abnormal conditions is if it's in a compound critical state and has a big gap, I just put the boxes on it and trade it in either direction and try to get to no lose plus dinner for 2, because that's the one that is most likely going to be a harsh winter,
Correct.
which then leads to the SSC and the Kata 2s forever. So instead
Well,
of
yeah.
waiting to see a harsh winter, I just trade it as if it's going to be a harsh winter.
Good. Yeah.
And if you think about it, if it closed like this with a doji and then had a big gap down, it just made a harsh winter. I'm actually trading the second leg of a harsh winter.
Yeah.
Now, if we take a look at Alcoa,
The opening range for 3 minutes is 3 mmRB, 60 cents.
yeah, what I'm going to talk you into is visual box trading here, just so you know.
I just reviewed that over the weekend on the foundations.
Yeah. So if I did, let's see, where's my little pen here? There's your OR3.
Yeah.
Here's minute 4, 5, 6. That's supposed to be green. Hold on. There we go. Approximately there.
Okay, yes.
And then you just say, look, wide or $0.50.
Yeah, 50 cents, 45 cents. Yeah.
Yeah, that's fine.
It's
All day.
2.5 times
You'll
the
net,
regular
yeah.
market.
Hey, what if you just did this?
Yeah.
That's a 0.2 off your risk, and that's on this one. You know,
Correct. Yes.
and then there's a 1, 2, 3 reentry. Oh, there's an emerging dragon and
Right.
crossing the Bollinger Band main, and it's already north of the VWAP.
Exactly. Yeah.
So that's why I say, trust that. Give it that much room.
Yeah,
Now,
adjust
here's-
the size accordingly. Yeah.
Yeah, so here's some things to watch for on that. Like the little signposts that all is well. Spring is over, now it's in the summer.
Yeah.
That's good. Hey, the turning point of the RL30, this is an owl entry
Yeah.
right here on a 1, 2, 3. And that's crossing the Bollinger Band main.
Okay.
And then this is a Kata 2. and then this is a free
Yeah,
and
close
clear,
it.
free and clear.
Yeah.
And 50 cents.
That was a huge move.
And
1.2
Alcoa,
range
and the
10, I think.
R10 in Alcoa is 20 cents.
20 cents, yeah.
So use 40 cents. And R5.
Yeah.
There's still 4-to-1 baked into the cake on a range stat move. And that's why I say, you know, the big gap is the first. That big gap is the first urge. And so, watch what happens if you use the. Let's see, where's my error? So if I use. This is about 20 cents right there. Oh, I can actually use the. It's not letting me draw it. Hold on. Oh, Cliff was even better, by the way.
Yeah, I made more
mean,
money
isn't that
on
sick?
Cliff than AA. Yeah.
Isn't that sickening? You
I
know,
made
I'm
money.
telling you, you know, we're monkeying around with Tesla and AI and all that shit.
I quit Tesla.
Yeah, it just costs too much. Who needs it?
Yeah.
You don't need it.
Yeah, I lost too much on that.
AA and Cliff, Devon Energy, IP, Mexico, and Brazil.
Mexico.
I mean,
Brazil.
if I'm being honest, because that gives you the two specialty indexes,
Yeah.
and I just prefer one of those two.
I traded ILF actually on Friday. I was looking at the ETF, and ILF did well too because Mexico was one of them.
Look, this will make you sick. That's Mexico.
Yeah.
That's the case of the gap up, you know.
Yeah.
I mean, and Mexico does that all the time. Look how important the VWAP is.
Right, yeah.
And every time it gets away from the VWAP, you just, in the back of your mind, you're just saying, okay, that somebody's going to come cash that check.
Yeah.
It leaves the station, it get that far above, somebody's going to cash that check, half of it.
Yeah.
And then on this leg, it's up here. You're going to cash that check. Now, this one should come down to here.
It
Doesn't. Holy smokes. This one. That's the one. And even if you were still in this thing late, you might have fake one, go two. Holy shit, you know?
Yeah.
That had 5
Five
tradable
legs.
moves.
Yeah.
Lunch. 4. 5 tradable moves to make multiple R's. Mexico. And that's blended, you know, many business sectors in there too. So yeah, so just think of it at compound critical state. Then you set up the previous day as the range of normal. Whatever it took 5D day to get in there, or it was a channeling system, whatever. It's a compound critical state. Better if it's a doji. Better if it's a gap. And then if it's that's what I want. I want it in a compound critical state plus a doji and a big gap. That's why I search, you know, in the morning. I searched in the morning for that. Imagine that was the gap. I'd be looking at Where's my? Come on. I'm looking for.
Percent sorting, yeah.
Yeah. Where is my? Yeah. Either this and that instantly, and I usually like this because it's already pain and suffering.
Alcoa was at the bottom and then it finished at the top.
Yeah. I mean, crazy. That's one of those 2 days out of 5 it can make a range stat move. You know. And yeah, Alcoa just like, oh my god, and that's again. Notice the power of the VWAP.
Yeah.
Anyway, all right, that's plenty for us. That's a couple hours. So let's get this recorded. Let's get it posted.
It was very helpful. Thanks for the session.
Yep.
And the question, Greg.
Thank you, Ken.
Thank you, Ken. There was a lot of goodness here.
Okay, cool. All right, guys, have a good rest of the Sunday.
All right, take care. Bye-bye.